Good morning. I'm Pete Najarian. This is the Take for Market Rebellion. And yesterday, kind of a tight range, quite honestly, and a little bit of movement here and there. We stayed positive most of the day when you're looking at the Dow itself. Closed up about 60 or so points. You look at the NASDAQ, a little bit more volatile up and down, but when we finished out the day, up about 27 points. So a fairly tight range, but a little bit rangy and a little bit rangier when we're talking about the NASDAQ itself. And you take a look at crude, that had a decent range, 102 to 106, been moving around a little bit, closed down around 102. Nat gas, I don't bring this up as often as we should, but we've been talking about a little bit here and there. We've talked about a lot of those various options that we've seen in that specific area of the energy sector. But I'll tell you, still above that $8, as a matter of fact, well above that $8 area for nat gas. Wheat hanging around that 1100 area, that stands out as well. So a lot going on. And of course, we've got the Fed today. But as we look back to yesterday, energy was the lead sector. And we look at some of the volatility yesterday. We finally did break down underneath that 30 level. We closed closer to 29 and a quarter or so. That level of range there, about 29, call it to 33. So we definitely did get not only under 30, but closing on the lower end of things on a very, very low volume day. And I think that was something that really stood out for me. It was the lowest volume day of the year. Now, the day before, we traded around 40 million contracts. As I say, we're averaging something close to about 42 million contracts per day for the year, even with this slow April that we've had. But as we've gotten into May now, a little bit of volume on day one, day two, kind of dropped off significantly. So we'll keep an eye on that. And today is starting off a little bit slower as well. But before we get there, energy. Very explosive move, nearly a 3% move to the upside. You see names like Chevron and Exxon and ConocoPhillips all moving to the upside. You had the financials up about 1.25% yesterday. JP Morgan, Goldman Sachs, Bank of America, all of those contributing pretty nicely to that. And materials. And materials had a pretty daggone good day. Nucor, Cliffs, names like that, ArcelorMittal, all having a pretty good day, up over 1%. So that's where you're seeing some of the positives in the market itself, along with Western Digital, which had a nice big pop yesterday. Some of those beta names in energy, we bring up names like Devon and the Fangs of the world, as well as Marathon Oil and some of those names, all within that area where we always refer to it as those betas. The XOP, great ETF if you're looking for a list of some of those kinds of names. Mosaic had a pretty decent day yesterday. Throw in some Lucid, throw in some Boeing, throw in a couple of other names that were on the positive side, but there was definitely some negatives kind of pulling it around. And that's kind of why we were in that range that was kind of pulling it back and forth a little bit. Rockwell, definitely one of those names getting pulled to the downside. Expedia on the outskirts of things, but that name definitely under some pressure. The big miss on the earnings side of that one. Hilton pulled back. Now that was a little bit surprising. Airbnb yesterday was getting pulled by Expedia, but today's a little bit of a different answer after those earnings last night. And then chuck in Datadog as well. So as we get into today, obviously the focus is going to be on the Fed. Everybody's going to be looking at the Fed. We have been told it's going to be a 50 basis jump. I think we can say that it's been very transparent, and that's something that people are definitely looking at, and they're wondering now, what about the commentary? That's what people are wondering. I think what we're seeing right now is that part of the 50 basis points priced in? It certainly should be because of the transparency. But what are going to be some of the comments coming out after that? That, I think, is what's really part of this big Fed day that we're talking about here. You look at the 10-year, up over 3. It was about 296 to start off the day. We jumped up over 3 last I looked. We still have volatility trading in those 29s, the lower 29s. Crude oil back up and over that 106 area. A lot going on there. And then you look at the market, a little bit of up, a little bit of down. Last I looked, matter of fact, we were looking at the NASDAQ getting dragged down pretty good. It was down about 140 points or so. And yet you look over at the Dow, that was up about 50 or 60 points. So you're seeing that little bit of a back and forth and seeing a disparity of those two major sectors that we talk about each and every day. And 29, very close to about a 2% move expected out of the S&P. If we're not getting that, we're going to start seeing that volatility start getting sucked out of the markets. We'll see if that happens, or maybe the Fed's going to be a catalyst that's going to cause a lot more volatility to come into that market. Speaking of volatility, we talk about unusual option activity all the time, right? That's how we end this each and every day. But I got to tell you something. Tonight, after the close, we've got a great thing for you. It's going to be a free webinar, should be a lot of fun. I'll be joined with or matched up with Ryan Mastro, who does an absolutely outstanding job. He's a lot like John and myself. He was a floor trader at a period of time in his life. Then he became an off-the-floor trader, very much like most and almost everybody. It's almost just computers down there these days. A few humans around there, mostly to manage the computers. But Ryan, great guy, and he does a great job for us. And we're going to tell everybody how we dissect those trades, what makes those trades unusual, why we pick the names that we do, and some of the research behind what exactly goes into looking for unusual option activity that we are citing each and every day. It's what we've been trading on for the entire career that all of us have had. Ryan does a great job, and we'll be going back and forth on all the different ideas on that. That's at the market close today. Should be a lot of fun. Hopefully, if you get a chance, you can go and be a part of this whole thing. It is free. You just got to click on the link. But I will tell you, if you can't make it tonight, you can still sign up, and we will shoot that out to you as well. So keep an eye on that. Energy, again. Now, we've been talking about this for a really long time. Yes, there's been pullbacks here and there. You go back, and we've got all the historical things within our site here at Market Rebellion. You go back to November 2020. Oil was getting off of those lows. It was trading close to that 40 level, trading closer to 38. And we started seeing buying. And we've continued to see it since that time. Here we are now. We're in May of 2022. We still see a lot of buying each and every day in the energy space. Matter of fact, just the other day, I had Valero as one of my unusual option activities along with the XLE. And that was just in the very recent last few trading sessions, as a matter of fact. But energy started the day a little bit higher, but still well over 1% to the upside. You got materials starting off at least pretty strong in the positive. And then you look over at technology, has been kind of shifting around, but that's gotten pushed a little bit into the negative territory. Consumer discretion, that's where the real negative is today in this session. Early on, not so much of a factor. As we've gotten into the first hour of trade, last I looked, consumer discretion was down about 1.5%. Gives you a little bit of an idea of where the stocks are that are kind of shifting around and moving within the markets themselves. So on the strong side of things, where do we stand right now? Well, last night we heard from Starbucks. And even though it wasn't something fantastic, a lot of the read-through was, okay, Starbucks is finally in a position where with the former CEO and the founder is there and he's running the show now. And are they able to start making a bit of a turn? Can he do the negotiating that they need to do with workers, unionization? What's going on with the lockdowns in China? What can he even possibly do about that? All of those factors were something that they tried to discuss as best as they can. And as a matter of fact, you could see a little bit of a rally out of that stock today. So a lot of people buying into the idea. China will eventually open back up. We will get some organizational answers within the labor shortage that everybody has been dealing with, including Starbucks, and some of the pricing and so forth. So that's something that stood out. AMD as well, absolutely crushed it once again. Quarter was absolutely unbelievable. That was strong very early on. Matter of fact, last night, pretty strong as well. Then you look over and you see Marriott. You look at Airbnb with some pretty impressive numbers once again. So even though they got dragged down yesterday, Airbnb with a pretty nice reaction today, at least early on. Chevron, one of those names moving to the upside. Caterpillar, throw in Diamondback, which Fang is another one that's having a pretty decent day in the energy space. That's not all great, though. We talked about some of the negatives. We talked about actually seeing that there's a pretty good swift move to the downside for the NASDAQ itself. You've got names like Akamai, you've got Qorvo, you've got Skyworks, you've got some of those Chinese names getting pulled to the downside. Datadog, Netflix, Nike, Nike again, by the way. Then throw in Tesla, Google, Amazon, Facebook, all with negative, not necessarily getting sold off hard, but all in negative territory, all being a big significant pull. Apple, last I looked, was in positive territory. Lyft is another one. You look at Lyft, you look at Uber. Now, the biggest challenge that these guys have had, in my opinion, for a very long period of time was, just like I said throughout the pandemic, triple digit, quadruple digit, or no PE is a problem. And that's something that's been around for a really long time. You look at something like Lyft. They did make money for a little while, and then they didn't. And Uber, the same problems. When will these mature companies make money on a consistent basis. And I think that's a big problem, obviously, that they're facing. Labor shortage is something that has been brought up time and time again, but a lot of different issues that they're dealing with in trying to within that rideshare world. And obviously, there's a huge difference between the fact that Uber is much more international, Lyft is not, and what Lyft does with people rather than with Uber Eats and all the other things. So there is a definite difference, but still both in the ride shared area and both still struggling to make money on any kind of a consistent basis. So got two unusuals and I'm out of here. IGT is number one. That was trading just below 21, call it $21 a share. They had a buyer of 3,200 of the July 24 calls. Those are getting hedged. They're buying those calls for around 29 cents. They are selling some upside, but let's not even get into that. The July 24s are the folks that we've got, 3,200 of those. By the way, we do have earnings coming up on the 10th as well of May. These are July calls that they're buying a little extra time for these calls. We're sticking with energy with number two, OIH, the services sector. Now, trading right around just underneath 271. It was trading 270.80 at the time. A buyer of 3,000 of the June 310 calls. Now, those are a little bit more expensive. Those are going for about $6.50. Those are getting hedged against the 315 calls, same expiration cycle. So they're buying the 310s, selling the 315s, making that a spread, and it's costing them about $1. So, $5 spread for $1. That's exactly what John and I always talk about. There are certain levels that we think when it makes sense to do spreading, this one does make a little bit of sense, fairly expensive, and you got to hold this for a while. So they're very interesting to see that. And the fact that energy still is one of those that continues to hit on the unusual options each and every day. As I mentioned, today at the market close, we've got that webinar, and we're going to be talking about free webinar, by the way, and we'll be talking about the unusual option activity, not just from the two that we've got here, but throughout the last couple of sessions, and show you exactly what it is that we do, how we do it, and what we're looking for oftentimes within the unusual option activity. Have a great day of trading.